We're going to do a brief video on sp500 and stick with me to the very end, and I'll show you how to get the prices that you see on this page for free. What we're doing today is taking a look at this algorithmic output from quantitative formulas that determine entry prices for stocks, forex, crypto, and futures. I'm going to scroll down here and take a look at the S&P 500 or sp500, and what you're looking at here is an algorithmic output of entry prices. Today they're generating buys, some days they generate shorts, and you're looking at holding periods here, 1, 2, 5, 10, and 20 trading day, not calendar day, but trading day holding periods. So these come out every day, Monday through Friday. We publish them. Today, these are good for the 2nd of June and good only for the 2nd of June. They expire every day. So what you would do here if you wanted to take a look at these, let's say you decided to do a one-day hold. This is looking at a buy at 40.73 and some change today on a one-day hold. So that basically means if the price hit 40.73 and change, you could buy it today and hold it no longer than the end of market tomorrow, and take profit as soon as you get it, close it out worst case, end of market tomorrow. The same thing for all the rest of these. If you wanted to do a 10-day hold, 40.85 and some change, you could buy and then hold worst case 10 trading days. Now again, you're going to take your profit as soon as you get it. That's the way this program's developed. Profits are taken as soon as you get them. Worst case, you close it out at the end of the prescribed holding period. Now a 1, 2, 5, 10, 20-day holding period is basically the longer you're willing to hold it, the higher your average profit should be, and the higher your average win rate should be, or your success rate should be. There's obviously no guarantees on any particular trade, but that's generally how this works. Now, you can buy a one-day hold, and especially with sp500, you can buy a one-day hold and often day trade it. So there's a really good probability if you bought, if the market hit this price, you could get a move. If it does move in your favor, and it might not, but if it does move in your favor, there's a really good probability you could get out of it today. So you can use the one-day hold period to day trade or to position trade a day and so forth. Let's say you wanted to position trade or swing trade for 5 days. You'd look for the market to hit 4108, and as long as your own independent analysis backed it up, you could buy it there at 4108 and change, and with an anticipation of holding it no longer than 5 trading days. The market may rally today, you take a profit, or it may rally tomorrow, the next trading day. Whatever it does, you either take a profit when you get it, or you close it out at the end of 5 trading days. So you can use them to day trade, position trade out to 20 days, or swing trade to 5 or 10 days. These are published every morning before 7 a.m. Monday through Friday. You're either going to get a buy or a short, not both, but each day you'll get a row of buys or a row of shorts. They're really a fantastic way to trade the sp500. This particular futures contract, the ES, is the mini 500 sp500 futures contract. You trade futures if you want to trade the sp500 because, number one, they're extremely liquid. Number two, the transaction costs are ridiculously cheap, especially if you go through a good discount broker. And number three, you can get leverage very easy. So if you're comfortable with leverage and you trade with leverage on a regular basis, you can get tremendous leverage on an sp500 E-mini futures contract. So there's really no reason to trade in other instruments. You can obviously find other instruments. You can trade sp500 options. You can trade sp500 indexes. There's a lot of different ways to express yourself in a trade in the sp500. But the reality is the volume on the sp500 E-mini futures, and your ticker symbol is ES, the volume is ridiculously high, and you can trade huge positions in and out by the minute. You should take a look, if you're interested, at the 1-minute volume chart of the SP-ES futures contract on the Chicago Mercantile Exchange, and you'll see what I'm talking about. If you look at the 1-minute volume chart, you'll see that the volume is just tremendous on the sp500 E-mini futures. Don't be confused. There's several different E-minis or different types of futures contracts for sp500. You're looking for the one with the ticker symbol ES, and it's by far the biggest traded as a futures contract for the sp500. So again, 7 a.m. every morning. These are published Monday through Friday. If you'd like to get them for free, you can just go to our research, RBAMresearch.com. No credit card required, absolutely no cost. Just register and you can get them for free. In addition to the S&P 500 futures, we have crude, gold, and T-bond futures, the major forex pairs, Bitcoin for crypto, and we follow buy-only prices and publish buy-only prices for 190 plus stocks. Again, every morning before 7 a.m. Monday through Friday at rbamresearch.com. There's a link to RBAM Research below in the description. If you like this video, please click the like button. If you want to subscribe for more of these videos, please do that. And remember that everything you see on our website is for entertainment purposes only. You definitely trade at your own risk, and that includes all of the entry prices, their recommended points, and you should always back them up with your own research. Please consult a financial advisor if you need to.